Guys, in this video, we're going to be examining SPY. This is the ETF of the S&P 500. This right here is your whole market. Now, what we're going to do is we're going to do a quick little technical analysis here on our daily chart, but then we're going to go into a broader overall view of basically what is happening in our markets now and why do we have that nice big sell-off today. So the technical side of everything here on the daily, we're going to keep it really simple. Let's just say 385, 381, 380, 371, and 395. That's going to be your levels, okay? And what trumps all of those levels is going to be this 50-day moving average. What I believe will happen sometime in the near future is that either we're going to consolidate in between the 382 and 385 mark up here, go down and then kiss the 50-day moving average, or we're going to consolidate and then the 50 day is going to come up and touch before we get a next move higher to all-time highs yet again. I am short-term bullish. That sounds probably ridiculous to you guys right now, but you just got to wait and listen, okay? But for right now, we're just going to be watching the 385, 381, 371, 395 levels, and we're going to keep an eye on this 50-day moving average here on the daily, and that's going to be our major support, and that's going to give us a lot of heads up as to what may happen in the near future. All right, so broader view, what is happening right now? Everybody's talking about the treasury yields, but we've heard this same song and dance before, right? Last year with COVID, and people forget, this also happened where everybody was talking and worrying about these yields back right before the spiders actually crossed 300. Now, I don't know if you guys have been trading as long as I have and remember what happened and how the spiders in here traded before they actually broke 300, but that's why I got a chart. We can go back and see. So obviously, if we scroll out here, we are on the daily, scroll back out. Okay, here's COVID. You can see big drop happened. And when we actually ended up breaking 300 was right around the July-August timeframe. So you can see right in here, went up and then we broke 300. This was all-time highs up here. And if you guys don't remember, basically everybody was screaming the same thing. We're overextended, correction's going to happen, a huge correction's going to happen. This market can't hold up. It's just the same old song and dance that we're hearing now, okay? But what happened right before this? Obviously, we didn't just start from the beginning of the year and just climb straight up into 300. But what happened? What's interesting that happened back in May and June? Well, as you can see, we climbed. I mean, we had a nice bull run here from the beginning of the year into May and June. And what did we do? We didn't go up and we didn't even hit 300. We didn't even hit 295. What did we do? We messed with 294, 294, 292, and then immediate drop below this 50-day moving average, bounce off the 200, and then we made our way up to 300. And then we didn't even hold 300 for that long. We crashed back down again at the beginning of August into September, and then finally crossed the 50-day, and then messed with the 50-day again, and then finally had that nice move winter time frame going into the new year in 2020 before COVID happened. Now, does that sound familiar to any of you guys? Let's look and see what's happening right here. All right, we're just going to zoom in a little bit. What's happening? We're above the 50-day. Bollinger Bands are tightening and expanding just like they should, stair-stepping. Okay. Let's see where we're at here. Are we gonna go up? We're getting close to 400. Where are we? Oh, wait, no, 394, 392. Sounds really interesting, right? Sounds very interesting. The only difference is what I can tell right now is we're just gonna base it off the dollar. And what they were saying back then is that we were having a very weak dollar. And if the dollar was weak back then I don't know what the dollar is now because it is worthless. This thing is just oversold. Here's our dollar index here on the bottom. And you can see really we consolidate and trade inversely with the market here, the dollar does, but it really consolidates and there's still some positive drift overall in it. You know, sort of like if you're looking at like TLT or something like that, that's probably a bad example, but you get what I'm trying to say. There's still overall positive drift, even though it trades inversely. You get the gist. But really what we are told back here is that this is a weak dollar. The only reason that it's up right now is because the Fed's pumping all the stuff into it. But COVID happened, the run into COVID changed everything. Still had positive drift. And then all of a sudden we consolidated when we had this nice big bull run here in the market. And I believe we're setting up to, we're right here right now, right? So I think we're going to kind of go back down. I don't think we're going to break the 50-day, but we're definitely going to touch it and then consolidate more, go up above 400. And I think we're going to repeat the same process. but that means that the dollar is going to have to consolidate. But what happened after this big consolidation here right before COVID? Well, we stopped trading positive with a positive drift. We didn't trade exactly inversely with the market, and we didn't trade with a positive drift. We just consolidated. And then what happened? COVID happened, and boom, immediate inverse, right? The Fed has to do all they can to try to revive this economy, inverse, and then we're just dying. That's all it was. And this recovery was way too fast, way too quick, and this dollar is worthless right now. So the only difference is between when the spiders tried to break 300 and when they're trying to break 400 is that our dollar is just trading very, very weak right now. And the reason that we actually had that big sell off today is because you can see we had a big green candle here in our dollar. How much lower can the dollar go? I'm not sure. This needs to consolidate here soon. And I don't know what everybody is planning on the outlook. This Biden government, I don't think the market really understands what. I don't think Biden's government understands what they're trying to do with this market. All things, but I get they're trying to pump with the stimulus and all that stuff, but it's just gonna be really interesting to see. So one other thing that we're looking when we're looking at the dollar, what's happening with the dollar and the market is that we have to open up our precious metals here. So we're gonna look at our gold silver index, and you can really see we're in this nice wedge, and basically we broke below the 50 and the 200 day here on a daily, and we're just setting up a wedge here. Now, the reason that this looks somewhat familiar to you guys, if you or you may or may not know what this looks like, but this is exactly what happened right before COVID hit a year ago. So kind of the same exact setup, only we were above the 50-day here. And if we zoom out even further, we can go right around to June, July. You can see that actually gold pumped up this market. So what we want to see going forward, okay, is that we want to see gold break and just rip, because gold is going to follow this market. A strong precious metals is going to be the next step in pushing this market higher. I understand tech and all that stuff, and they're not going to be able to do all the work. And I think as much as precious metals trade inversely from the market, overall there is positive drift. And I think gold, silver, precious metals, they're going to carry this because everybody's still going to be rolling out of the dollar. The dollar is worthless right now. So any roll into the dollar is just going to hurt gold. It's going to hurt the market. So what we want to see is we want to see a nice rip above the 50-day here, a break of these Bollinger Bands, and then a nice move higher. We can zoom in here on the hourly. We can zoom in here. You can see we're right below the 50. Really, we're just so close with our moving averages. They're tightening so much. A big move will happen. It just depends on what kind of move. Are we going to sell off? Does that mean our dollar is going to get stronger? We don't really know what's going to happen in this economy. Basically, consumer data came out, and I believe it was the 24th, so a couple days ago. Basically, the current outlook was greater than the future outlook, if that makes any sense. So consumer data says, yes, we're satisfied now, but we're unsure, we're leery of the future and what's happening. So I think that's kind of how everybody is viewing this economy right now. We're happy, yes, but I don't really know, is this sustainable? Are there going to be more sanctions coming in, more lockdowns? Do we really trust all these reopenings? It's all kind of balancing right now. It's all connected. Now, everybody's blaming it on these yields, but I think there's more to it. I think we have to examine the precious metals. We have to examine the bonds, dollar, and then compare them to the spiders. But I think overall, I believe that this market is just acting the same way it did before we broke 300. I think that's all it is. And it's all about hype. You're hearing all this bad news, bad this, but I think we're going to power through it. I think metals and the market will rip. Sorry, guys, kind of rambled on there. But but if thanks for watching. Make sure to check us out on social media. We have attached the links to our socials in the description. We also have a swing trading service if you are interested. More information is going to be found in the description below. Thanks, guys.